crossing moments ago, the final read for the first quarter GDP down a worse than expected 1.6%.
We're now almost finished with Q2, and I don't see a whole lot of bright spots that have happened over the last 3 months.
It's the time of year when friends and family gather to barbecue, watch fireworks, and enjoy the warm weather. But this year, there are a few clouds on the horizon. In this video, we'll take a look at the state of the economy, so stay tuned as Cathie Wood discusses her thoughts regarding the latest revised GDP report and other things. If you're new to my channel, be sure to subscribe. Let's dive into the video.
Now, on the economy, a couple of things are changing, which I think will turn the Fed's head. One is employment. We're hearing about layoffs. We're hearing about venture capital firms advising their companies to lay off quickly because this is bad. And that is happening. We're seeing initial unemployment claims moving up. Now, if you're looking at a very long-term chart, the move up seems imperceptible. But if you're looking at the numbers, claims have gone from 167,000 during the week of April 1st to 231,000. So that's a 35% increase, and that's a change in trend.
With ongoing inflation, interest rates, and other headwinds affecting businesses across industries and borders, venture capital firms are advising to lay off workers and slow hiring. And it all has started already. Now, the latest economic data came in the form of revised Q1 GDP numbers, which was the final read for this quarter. The data reveals that the economy grew at a slower pace than previously thought. Let's hear Cathie Wood as she discusses the same.
Housing is definitely losing steam. Another curious thing that we learned from the data that came out, reported in this last month, was the GDP revision for the first quarter. Now, the GDP number comes out first month after the end of the quarter. It's revised in the second month and revised again in the third month. So in June, we got a second revision for the first quarter. The most surprising thing in that revision, first of all, rarely is much revised in the third revision, but this time, real consumption, which was originally reported at 3.1% in the first quarter, was revised down to 1.8%. Now, that may not sound like a big adjustment, but that's nearly cutting the growth in half. I've never seen an adjustment that big. And I think what's happened, and this has caught a lot of companies off guard, is the consumer just started shutting down. And we saw in April, the original number reported was 0.7%. That was revised down to 0.3, which when you adjust for inflation was probably down 0.6%, something like that. And in May, the number was, no, I apologize, that 0.3 is a real number. In May, the real number was negative, minus 0.4. So we are seeing declining consumption. And we know from Target and Walmart, who have been shocked, I can tell from the way managements answer questions, they're shocked at how the consumer has turned off. And they are shocked at how their inventories have ballooned. We went through this last time, so 33%, I think it was for Walmart, 42% for Target. I think even Costco, 26%. Home Depot, I think, was 32%. I mean, these are massive increases. And it's going to take a while for them to unwind. So what are they going to do if they want to clear their shelves? They are going to cut prices, and they have said they're going to cut prices. So there you go, deflation.
The latest figures on GDP growth show that the economy is still struggling to recover from the pandemic. Cathie Wood discusses how real consumption, which is a measure of spending by households on goods and services, was revised down from 3.1% to 1.8%. She points out how this means that growth has been cut in half. According to her, this was the biggest adjustment that she had ever witnessed till date. According to the report, GDP fell at 1.6% annualized rate last quarter, revised down from the 1.5% pace of decline reported last month. That was the first drop in GDP since the short and sharp pandemic recession nearly 2 years ago. The report leaves inventories in a more overbuilt position than expected, putting second quarter GDP in negative territory. Now, to settle down this issue, retailers like Target, Walmart may be taking an unusual approach to returns amid the supply chain crisis. According to recent reports, they're considering the Keep It return policy, where you can get a refund. With that, you can also keep the returning unwanted items. Now, that's an insane policy. Let me know your thoughts on this policy in the comments below. The economy is struggling, with high inflation and GDP growth that has been below expectations. And of course, there are the ongoing inventory issues going on. So, what does this all mean for the average American? Let's hear what Cathie Wood has to say on this. But before going ahead, if you found this video informative, be sure to give it a big thumbs up.
We got today GDP Now, which is the Atlanta Fed's version. Every day economic statistics come out. The Atlanta Fed adjusts its real GDP number for that quarter. And today they reduced it to a decline of 2.1%. So 2 weeks ago, 2 or 3 weeks ago, they had a positive 1%. Last week they went to a minus 1.1%, and now it's minus 2.1%. So put that together with real GDP at minus 1.6% in the first quarter, and we have a recession. The technical definition of a recession is 2 consecutive negative quarters of real GDP growth.
The U.S. economy is teetering on the edge of a recession. According to the latest report from the Atlanta Fed released last week, the GDP number is in a precarious situation, with it being minus 2.1% on July 1, down from minus 1% on June 30. Cathie Wood believes that this, coupled with the first quarter's GDP being minus 1.6%, would fit the technical definition of recession. Do you also agree with her? Let me know in the comments below. And don't forget to leave this video a big thumbs up.
We're also seeing, we get a lot of regional reports, the regional feds and other trade associations put out reports in the middle of the month. And looking at the Dallas one, Richmond, and Philadelphia, they're all in negative territory or much lower than expected. And the one that surprised me the most was Dallas, which looked like it was one of the worst reports. And that's right in the middle of energy country. So what's that all about? So, and then, you know, in the middle of the month, the Fed, this was June 15th, the Fed did 75 basis points.
Now, various other local reports were also in negative territory this month, but she was most surprised with the Dallas report. She also pointed out the Fed increasing 75 basis points. So what do you think is in store in the future? What could be the next inflation rate? How will companies resolve these supply chain issues? How will the economy deal with all these negative reports? Let me know your thoughts in the comments below. I'll see you in my next video. To get notified, be sure to hit that bell icon. Also subscribe to my channel for more videos like this. Adios.